Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market, and I just want to say what a great day for us gold bugs. I truly think over the next 10 or 15 years, the gold bugs are going to get the last laugh. I think the S&P is going to go down to about 1,000, maybe even 800 after this euphoric melt up, of course. I think silver will face triple digits in next decade, late 30s and 40s, even quadruple digits. But today just got me super excited. It's been a while since we had days like this. Gold up $38 an ounce, silver 47. Percentage wise, gold was up 1.9%, silver 2.9, and GDX that was up about 3.68%. And the GDXJ, which is really the mid tier, it's not really the juniors, that was up 4.27%. So the smaller caps were outperforming. That's a very healthy move. All for, that's what you want. You want gold performing well, silver outperforming, the miners outperforming both, and the juniors and the small ones outperforming the big ones. That is the healthy run. That's a healthy run up there. So hi ho gold or hi ho silver. So it's been a while since we got to celebrate days like this. But why did this happen? Everyone says weaker dollar or rate cuts. I'm gonna go look at I'm using Yahoo Finance right now. US dollar. See, Dixie. What was that? DXY. I'm not sure what the dollar index did, but the US dollar, I'm not sure, but the US dollar was probably not down or up much, so I don't think that really has much to do with it. The reality is this. We're going to go, as I always says, boils down, what is the most bullish scenario? Cutting rates and a weak economy. If you go to my video yesterday, the Fed said they're going to cut 3 times. They're going to cut. They don't see anything. That's very bullish for gold. That is bullish, but that alone can't. But I did the economic data yesterday. You can go back to that video and look if you need a report. But let's look at today's video. Today's data, S&P Global Manufacturing PMI, that was 52.2, above forecast. So that's actually good. That doesn't go into my theory. But remember, overall economic data, not one data point. The ISM Manufacturing PMI, 47.8, below consensus of 49.5. So it's contracting and it's worse than what they thought. Of course, ISM Manufacturing Employment was very good, bad, poor. Michigan Consumer Sentiment, consensus was 79.6. Today, 76.9. Another poor reading. Construction spending, 2% decline. The consensus was a 2% increase. So now, and if you look at the previous, it was 1.1%. So here's a little math. Let's say you start off with 100, add 1.1. That's 101.1 minus 2. That's 99.1. So spending is even worse on average. So construction spending, not very good. Michigan inflation expectations at 2.9%. So consumer expectations, the final 75.2, down from 77.1. And the final Michigan inflation expectations, that was 3% over the 2.9%. So if you look at this is not good data. This is declining data. Poor ISM manufacturing, poor Michigan consumer, poor construction spending. These are all not good indicators for the economy. So why did gold have a good day? It's the obvious. Poor economic data plus the sentiment of cutting interest rates. This is the bullish sentiment for gold. Poor economy and the Fed easing because it has to. And that's why gold is rocketing up today. And that's why silver is. And this is the environment we want. This gold bugs. This is the environment that's happening in the real world. So it should be starting to reflect in the markets. And this is the environment that's good for gold. And so as long as this soft landing and everything that's not that bullish for gold. But today was a perfect bullish day, and that's why the price went up. That's what leads gold higher. You need a weak, if the economy is perceived as strong, but they're cutting rates and rates are low and inflation's muted or not really that big of a problem, like the 2010s, which wasn't good for gold. All the money, they just use all that easy money and pump up the stock market, the Magnificent Seven and everything. It's when the economy's bad because the businesses won't be making income despite low interest rates. So the money flows into, easy money flows into stuff like gold that can't, and because it doesn't have a demand metric to it. Like oil, if there's a bad economy, then there's lack of demand. So there is some buying. But gold, this is the environment. So anyway, we'll see more. What this means is what I would like to see, though. One thing I also liked is that gold finished around its highs. It didn't go up 40 or 45, 42 points and then finish only $25 above spot price. That is a no-no. This, even though it was up $38.90, the high was about 42 bucks, and there wasn't there that long. I'm trying to get the 1 day. But yeah, it finished around its highs. 2087 and then 2082. That's not that bad considering it started from 2046. And I just want to make sure. Yeah, and it finished around its highs. What I'd love to see is either follow through tomorrow, or if there is profit taking, it's very minimal. It's only like $4 or $5 down. Now, if it's down 20 or 25 to Monday, finishes there, I'm not going to be happy with gold's price movement. But if it's down like 8, 9, or 10, or around there, or I'm guessing 4 or 5, I would say, okay, that's just a little profit taking from yesterday's move. I wouldn't be that worried. But if there's follow through and it goes up even more tomorrow, that's a great one. So the key level I would say to watch is 2100. It's approaching there. If it breaks through that, I think it'll break out even more. But remember the fundamentals. Poor U.S. government economic data, and I think we're getting there. I think 2022 was the year, but they juiced up through fiscal stimulus and a lot of spending bills that were passed in beginning of Biden's regime, spending bills. But the thing is, a lot of that spending, a lot of those bills that were huge spendthrift bills in the early of his presidency, it didn't start coming out until 2023 and right before the election to juice up and massage the GDP. Right now, I don't know exactly when or a lot of them will come, but I don't think there's not that much more. I mean, there's a lot of spending. There's always a lot of spending on government spending, but enough to prevent a recession. With all the bankruptcies rising, credit drying up completely, I don't think there will be. I still think these stock markets will be juiced up for the year, but it won't last that long. I think after the election year, as I've said before, and with interest rates, even if they cut 3 times, the consumer needs a lot more breaks than that. So anyway, that's what the gold needs: declining economic data and the Fed needing to cut rates. This monetary stimulus plus the declining economic data. That's what juices it up. 2008 through 2011, 2000, and the 1970s. That's what it is. In regards to the stock market, that finished up at an all-time high, finished as highs. This is the euphoria stage. And there's going to be a crash, but it's not here yet. And it's probably won't be here for the year. But the other thing regarding gold is oil. Crude oil, that was up. And that was up $1.55. I was trying to look. It finished, I think, around 79.81. Yeah, it finished, and it was up $1.55 today. If crude keeps going up, those inflation readings are going to be very high. And that will put the Fed in a tough trap. And that will be bullish for gold because they'll either surrender to inflation or they'll have to just really jack up rates. And if that is the case, that might be at the end of the year what crashes the market is that oil goes up to 100, 110, 115. You're paying for $4 a gallon of gas again. Gas is astronomically high. And the election's over, so his handlers don't care. And that's what they'll do. They'll jack up rates. And that's what they'll do. So anyway, that's all I have to say is that the stock market's in euphoria. But this rising gold price, or rising oil price, could lead to much higher yields. And that could cause a market decline. And of course, what do? More monetary stimulus for a bad recession. That's ripe for gold. But going back lastly to the economic data, not very good right now. So expect more rate cuts. But the ace in the hole, as the Joker said to the Batman, is that oil price. That's going to be... so who knows? Maybe after the election they will release or just empty out the strategic petroleum reserves. Who knows what they're going to do? But this environment is looking very strong for gold. And I'm going to enjoy the weekend. I'm going to enjoy the upswing. I don't know if this is the breakout yet, but certainly enjoy it because since 2011, gold bugs have not had a lot to cheer about. So enjoy it. Anyway, if you like this video, hit that like button and subscribe if you already haven't. I'll see you next video.